So dear students, in today's session, we will be dealing with the preparation of final accounts. And today's class, we will be dealing with preparation of final accounts. We will be dealing with questions which has got adjustments. So here goes the first question. From the following balances of X, Y, Z, prepare the trading account, profit and loss account, and the balance sheet as on 31st March 2019. So here we've been given the trial balance and the information regarding the books of accounts of XYZ. And from this, we will have to prepare the trading account, profit and loss account, and the balance sheet. Also notice in this question, we also have some adjustments. So we have to go about with the preparation of the final accounts for this question. Information. So in order for us to prepare the final accounts, we have to remember the thumb rule. Any item mentioned in the trial balance, we will have to treat it once. It will either go into trading account or profit and loss account or balance sheet. Any item given as an adjustment, we will have to treat it twice. Now, the twice treatment, it could either be trading account balance sheet or profit and loss account balance sheet. Okay, so I'll repeat that. Any item given in your trial balance, you will have to treat it once, either trading account, profit and loss account, or balance sheet. Any item given to you as an adjustment, you will have to treat that twice, and twice that would be into your trading account balance sheet or profit and loss account and balance sheet. So let's look at the items one by one. Here, drawings goes into balance sheet. Cash at bank, it is a current asset, balance sheet. Bills receivable, this is balance sheet. Land and building, this will be fixed asset, balance sheet. Furniture, fixed asset, balance sheet. Discount allowed is an expense. So this will go into your profit and loss account. Bank charges, indirect expense, profit and loss account. Salaries, indirect expense, profit and loss account. Purchases, trading account. Opening stock, trading account. Sales return, trading account. Carriage inward, direct expense, trading account. Rent and taxes, indirect expense, profit and loss account. General expenses, indirect expense, profit and loss account. Plant and machinery, fixed asset, balance sheet. Book debts. Book debts is another name for debtors. This will go as a asset, current asset into your balance sheet. Bad debts. What are bad debts? Bad debts are a portion of your debtors who are refusing to pay the money back. Okay? They are a portion of your debtors who are refusing to pay the money back. So provision for debt for bad debts is a indirect expense. This will go into your profit and loss account. Insurance, indirect expense, profit and loss account. Now let's look at the credit balances. Capital, balance sheet. Discount received, indirect income, profit and loss account. Loan. Okay. Now here, please remember the loan is featuring on the credit side of your trial balance. So will this be loan taken or loan given? Remember, on the credit side, you always have your liability. So this is loan taken. Okay, this will be loan taken. This will go into your balance sheet. It will be a long-term liability. Purchase return, trading account. Sales, this will go into your trading account. Reserve for bad debts. What is meant by reserve for bad debts? Reserve for bad debt means some amount of money that you have kept aside, and this money is what is remaining from last year. So money that you have kept aside to meet the expense of bad debts. So this is technically an indirect income. So this will go into your profit and loss account. Creditors, current liability, this will go into your balance sheet. Now let's look at the adjustment. Please remember, any adjustment, we will have to treat it twice. First one is closing stock. Closing stock will go into trading account and balance sheet. Insurance prepaid. Insurance prepaid, this will go into your profit and loss account and your balance sheet. Rent outstanding. Rent outstanding means outstanding expenses. This will again go into your profit and loss account and your balance sheet. Interest on loan due. Okay. Now, what does this mean? This means this is an outstanding expense. Okay. This is an outstanding expense. So this will go into your profit and loss account and your balance sheet. So with that note, we have discussed almost all the items. Let us start off with the preparation of the final accounts. Okay, we are starting off with the preparation of final accounts right now. We've prepared the format of the trading account and right on top we mentioned the name of the business, where we mentioned that we're preparing the trading account as on 31st March 2019. Now remember, whenever we prepare the trading account, you always start off with the opening stock. Okay, you always start off with the opening stock, and the opening stock we have over here, and the opening stock, the amount is 60,220. Okay, now next that what we have to consider is purchases. Okay, the next item that we have to consider over here is purchases. Purchases, we know that the amount is 1,99,080, and from this we also have to consider, or we also have to factor the purchase return. How much is purchase return? Purchase return is 1,450. Okay, so purchase return is 1,450. So let us 1,450. So let us consider that. And from purchases, when you subtract your purchase return, the amount that you get is called as your net purchases. Okay? The amount that you get is your net purchases. Net purchases is 1,97,630. Now to this, we have to factor all our direct expenses. Okay, into this we have to consider all our direct expenses. So the only direct expense that we have is carriage inwards. Okay, the only direct expense that we have is carriage inward, and we've got carriage inward also in place, and the carriage inward is 5,170. So that we have considered. Any other direct expenses that we have? We do not have any other direct expenses given to us in this question. So which means we can move on. Let us go on to sales. How much is sales? Sales is 2,81,500. From sales, we have to consider sales return. Okay, we have to subtract sales return. So from sales, when you subtract sales return, you get net sales. Okay? From sales, when you subtract sales return, you get net sales. So net sales is 2,97,630. Okay. Now we also have to consider closing stock. How much is closing stock? Closing stock is 70,000. Okay, closing stock is 70,000. So if you add up all this together, you would notice that your debit side is more than your credit side. Okay, you would notice that your debit side is more than your credit side. So since your debit side is 3,49,630, debit side should also be 3,49,630. Okay, so this side should also be 3,49,630. So which means the balancing figure will be falling on the debit side. Okay, the balancing figure will be falling on the debit side. So balancing figure, since it's falling on the debit side, it will be referred to as gross profit. Okay, this will be referred to as gross profit. So from gross profit, it works out to be from 3,49,630, we will have to subtract the total which is here. So once you do that, you get to see that your gross profit works out to be 86,610. Okay, your gross profit works out to be 86,610. So this is your gross profit. So with that, we have completed the preparation of the trading account. So dear students, now that we've completed the trading account, the next statement that we will have to prepare is your profit and loss account. Now, since we've got gross profit in trading account, we will have to carry down the balances to your profit and loss account. Okay, we will have to carry down the balances to your profit and loss account. So let us quickly do that. So I just want to quickly show you the trading account that we prepared once again, and the next statement that we'll be preparing is your profit and loss account. Now, for the preparation of the profit and loss account, we will have to consider all your direct expenses. Okay, we will have to consider all your direct expenses. So indirect expenses, I'm so sorry. We will have to consider all your indirect expenses. So what are the indirect expenses that we have? We have discount allowed. Okay, we have discount allowed. And discount allowed, the amount is 3,960. Then Then we have bank charges. What are bank charges? Basically, the charges that you have to pay for availing the bank services, and they might be charging you some commission. So this is 100 rupees. Next, what we have is salary. Salaries is 6,420. So rent and taxes is 7,680. Then you have general expenses. So general expenses are usually your miscellaneous expenses. Okay, what you call as general expenses, these are your miscellaneous expenses. So miscellaneous expenses also we've considered. It will come as an indirect expense that will fall on the debit side. Okay, next, what we have is bad debts. Okay, we have one more expense that we had missed out, which is insurance. We have one more this thing that we have mentioned, which is insurance. Insurance is 750. Okay, now we have to consider the indirect incomes. What are the indirect incomes that we have? You have discount received. You have discount received. So discount received we have factored, which is 2,980. Then are there any other indirect incomes that we have? Yes, we have one more indirect income, which is reserved for bad debts. Okay, which is reserved for bad debts. So this is 4,650. So that will also fall on the credit side. Okay, so I think we are pretty much it. Now we have to consider the adjustments. So what are the adjustments that we have to consider? We have insurance. We have insurance prepaid. Now insurance prepaid, either you could consider that on the debit side or on the credit side as an indirect income, or since we already have the item insurance over here, what I'm going to do is I'm going to subtract this from the main insurance amount. Okay, so insurance prepaid is 50. So 750 minus 50, the total will work out to be 700. Okay, the total will work out to be 700. We also have a rent which is outstanding. So let me consider that as well. To rent outstanding, and rent outstanding is 150. Okay, rent outstanding is 150. That has also been considered. Okay, now we've got one more expense that we have to consider, which is interest. Okay, we have interest on loan due. Okay, so this is an indirect expense. Okay, the interest due on loan, it is given to be as 6%. Okay, but now the question is 6% of what? 6% of your principal amount. Okay, 6% of your principal amount. So 6% of which amount? It will be 6% of. It should be 6% of 15,000. Okay, it will be 6% of 15,000. So you have to take 6% of 15,000, and that will be what will be considered as interest due on loan. So this will be 6% of 15,000 loan. Okay, this will be 6% of loan amount of 15,000, and that has been taken. Okay, so that has been taken. So 15% of this one, when you consider, it works out to be 900. Okay, it works out to be 900. So 900 is your interest on loan. Okay, interest due on loan. So that has also been completed. Now let us go about balancing this. We have to balance debit side with credit side, and that works out to be 94,240. Since your credit side is 94,240, it means debit side should also be 94,240. So here what is happening is, since the balancing figure is falling on the debit side, it will be net profit. Okay, it will be net profit. So net profit over here is we will have to calculate that. But here, since the balancing figure is falling on the debit side, it will be net profit. It will be net profit. And so let's just quickly calculate this. So this works out to be 69,450. 69,450 is your net profit. So with that, we've also completed the preparation of profit and loss account. Okay, now let's go about with the preparation of balance sheet. So we've got the format of the balance sheet prepared over here. So let's start one by one. We have to start off with the capital. So capital is 1,50,000. Okay, capital is 1,50,000. We do not have any additional capital, neither do we have interest on capital. However, we have net profit, and net profit is 69,450. Okay, 69,450. Then we have drawings. Drawings is 6,300. Okay, drawings is 6,300. We do not have interest on drawings. Okay, we do not have interest on drawings. So from all this, we will have to calculate. Okay, we will have to calculate the net amount, and let us do that right now. So the net amount works out to be 2,19,450. Okay, it works out to be 2,19,450. So 1,50,000 plus 69,450 minus drawings of 6,300, you will get this. Now next, what we have to consider is the loans. Okay, so loan amount. Okay, loan amount is 15,000. Okay, loan amount is 15,000. To this, you have to add interest outstanding. You have to add interest outstanding. Interest outstanding is 900. So the total works out to be 15,900. The total amount works out to be 15,900. Now we will have to consider all your current assets. Okay, current liabilities. So let us consider the current liabilities one by one. We have creditors. Creditors is the total amount is 18,670. Okay, it works out to be 18,670. Then you have okay, so that is the only current asset that I'm seeing. Just looking through once again. Okay, we do not have any other current liabilities that are mentioned in this question. Okay, now let's move on to the asset side. Let us see what are the assets that we have. You have cash at bank. Oh yeah, someone just corrected me. Yes, I did make a small calculation mistake when it came to the capital amount. It is 2,13,150.